Good morning. It's Harvey Jackson. Just going to go through the news that could impact the canola market a bit here. The Canada imposes a temporary remission on the tariffs for steel and EVs. This came from the cooperator, and it's just talking about the how the rapeseed meal fell 4.6%, and I got charts to kind of show that. They put a tariff on the EVs and other products as well, but China was going to retaliate with a uh, anti-dumping uh, rule. But we'll see how that all plays out if this is going to continue. You can just see the value of some of the canola as well for the Canadian government as well. And what I did here is just basically talk about since the announcement of the tariffs going on and what's happened to their three products that are priced on their exchange. So the rapeseed actually has gone up, 17%. Rapeseed meal has gone up 10%, but has fallen off a little bit here after the imposition of the tariff going on. Now, was there any product actually moved in that timeline? It's hard to say. That would take a lot more research than what I'm capable of doing. So this is the actual same kind of timeline of what's happened as well. So we basically, came in at 600. Now it's trading 636. So the market has actually had some pretty good waves in here in the market on the canola. Palm oil actually is probably another leading indicator that we need to pay attention to because it's trying to break out of this sideways pattern that it's built here for the last short while, and it's still got a pretty good uptrend. So a crop progress report came out after the hours. Here's Karen Braun. She's just talking about percent harvested. So corn is now 65% harvested. Probably expect to be over 80% by next week because the weather doesn't seem to be holding us back. And 81% of soybeans. That's moving along, and you'll get into the 90s easily by next week. Winter wheat planted is at 73%. That's in a pretty good range there as well. So this is just showing relative to other years, and you can see what she had mentioned here that we've traded through some of those uh, other years where we're at the top end of the range on the soybean harvest, and the only other year was the drought year back in or a year since 2010. So, and you can see the same thing on the corn side of things. The only one that's above us now is uh, the drought year. Oil seeds, just go through the markets. Canola is actually trading up, rapeseed up as well. Palm oil is kind of leading the charge with close to 2% up. So we're getting our support there. Crude oil up or 0.66%. And your soybean flat, and your wheats are basically down a penny to 2 pennies, and Canadian dollar basically flat as well. So if we look in a little bit deeper, we're getting some support from our 20-day moving average and our 10-day moving average, which I don't have on there as well. But and we're hitting our head up against that 200 days. So the 200-day is actually the what we need to trade through and then get about that 61.8. So that would be around that 650 mark for the January futures contract. Here's your November contract, and looking for a little bit of support to get back into this 650-ish area to probably get some more futures first kind of contracts in there. You could wait for 660, but that'd be making a new high. But let's just get some coverage in there would be a good idea. Rapeseed, there's nothing but strength and support on this uptrend, which is above the 78.6 retracement and approaching the full retracement value that was made back in July. Rapeseed priced in Canadian dollars, $138 higher than Canadian canola. That's well supported for our product here in Canada, of course. Soybean oil has been trading a little bit sideways, trying to break out of this small little sideways trade here. So and starting to come up against some of those moving averages as well. Palm oil, this is, as I shown before, it's trying to break out of the top end of that that sideways trading range at the top end. And would I call it a flag formation? Probably not. It's not narrowing, but it is trading sideways. Crude oil, trying to break out of this little retracement below this up to the 23.6 retracement value, and staying in that range and trying to trade a little bit higher. Soybeans, as I mentioned yesterday, it looks like we're going to get a full retracement from August lows. It just does not seem to be gaining any strength, even though it is green on the screen today. What I would note is it's above that $10 as well. But Canadian dollar still got a pretty steep downtrend, and I'm not certain what the news from the uh, interest rate changes will do. I think it could actually fully bring us back right down to this value here. Wheat, uh, there's not a whole lot of good news here other than we're still above some of these other values that we traded down to, and we've created this wave now. But uh, and we're trading below every trading or every moving average on here. So you got the 20, 10, 50, and 100-day moving average. So you've got a lot of marks against you. What I do want to point out, and I just did do this math a little bit, but you're just looking at the carry on this forward curve. So you got 611 to 634-ish kind of value, depending on how it snaps across. But you've got 109% of full carry using an average daily storage rate and 8% interest. So if you're looking all the way out to even next year, you have like 2/3 of your cost of carry covered, and 83% all the way out to July. So that's pretty decent when you're looking at something that's 41 cents higher in value. Spring wheat for new crop, still looking at the $7 mark to lock in as a futures first kind of contract, probably for that October, November, December kind of timeline. Later the better, and for basis improvement. Here's your Chicago wheat, same kind of idea. It's been pulling down into this direction and below all of these moving averages. Hard red winter, still somewhat supported with your longer term, or I'm going to say, sorry, it's a 50-day moving average. So it looks like there's maybe some support, but the other ones, it's failed. Same thing with the milling wheat, um, getting pulled towards this 23.6, which is right where the 50-day moving average is. Corn, if there's anything that's positive, it looks like this could be a buy signal on slow stochastics. Now, I would like to see it get above that 23.6 retracement value, which is right around that 410, or just above the 400 or $4.11